Welcome to Overnight Market Brief, Pre-Market Edition by AGI Era. Good morning. Today is Friday, January 30th, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at yesterday's close. Wall Street finished on a defensive footing. The S&P 500 settled at 69.69, down 0.13%, while the Nasdaq 100 declined 0.53% to close at 25,884. Crucially, the session was driven by a cautious sentiment, but the real story right now is in the macro assets. Right now, the 10-year Treasury Yield is trading at 4.255%, up 0.47%. The U.S. dollar index is up at 96.455, while crude oil is down around 65.16. Gold is notably lower, trading around 5,087.89, a significant decline of 4.98%. The uptick in the 10-year Treasury yield and the strengthening U.S. dollar are acting as a headwind for risk assets, particularly growth-oriented equities, while the sharp decline in gold suggests a broader shift in risk appetite or dollar-driven weakness. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been broadly negative. In Asia, the picture was mixed. In Tokyo, the Nikkei 225 finished down 0.10% at 533,322.85, tracking broader regional sentiment. Meanwhile, in Greater China, the Seng declined 2.07% to 27,387.11, while the Shanghai Composite fell 0.96% to 4117.95. The significant divergence here was driven by a lack of fresh stimulus catalysts and ongoing concerns about the property sector, despite Hong Kong reporting 3.8% GDP growth in Q4. In Europe, major indices are trading with a cautious tone. The price action suggests a continuation of the risk-off sentiment seen in Asia, providing a negative lead-in for U.S. traders. Economic data from the region was mixed, with Italy and Spain showing stronger than expected Q4 GDP growth, while France's economy grew at its slowest pace since 2020 and UK mortgage approvals fell. U.S. futures in the open. Turning to the U.S. pre-market, equity futures are under pressure. S&P 500 futures are trading down 0.43%, while Nasdaq 100 futures are down 0.56%. The relative performance suggests investors are rotating out of tech and growth stocks, consistent with the rise in the 10-year Treasury yield. The daily catalyst. Looking ahead to the session, investors are focused on three key catalysts. First, the continued upward trajectory in U.S. Treasury yields and the strengthening U.S. dollar, which are exerting pressure across risk assets. Second, the broad-based weakness observed in Asian markets, particularly in Greater China, signaling a cautious global risk sentiment. And finally, the lack of significant Tier 1 economic data releases today, which may leave markets more susceptible to technical positioning and macro flows. Given the overnight setup in rates and the dollar, the market's path of least resistance appears to be lower, pending any surprises from the data releases. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.